works. Greed clarifies, cuts through, and captures the essence.
You guys are sick. You're sick.
She says his job is making me unhappy.
But you're happy when you're unhappy.
I am happy when I'm not happy.
This is the LongVol Report with Dan Bustamante. Cross-asset investing, your money.
And we're back. This is episode 73 of the weekly LongVol podcast, an article of the week for the week ending June 20th, 2025. This week's title of the podcast is A Week of Wins. We're going to be talking about GXO Logistics, which had the Wincanton approval finally done from the UK regulatory body, and also new CEO. Also some updates to the 2025 year guidance. So a really big week there. That stock is just getting started. We've been talking about this, I want to say now, for 8 or 9 months. I'm going to get into some updates on that. If you're a new listener of the pod or the article, whatever it is, I'm going to give you guys a quick overview so you can get up to date on that. You don't want to miss this name. It's just starting to inflect. I'm also going to talk about VF Corporation. The Vans Warp Tour is back. They announced it this week. It took a break, hiatus from 2019. It's back finally. Look, this is a big deal for the Vans brand. Daryl Bracken, I always get his name confused, has done a really good job turning around that company. The stock hasn't moved this week. It is a turnaround situation. It might turn into a growth story as well. We think it's a 2 or 3 bagger. The Warp Tour coming back is just the start of good things to come on that. So that's another win. We're going to talk about HIMS breaking out, get into FTX, some oil names, charts of the week. There's some interesting questions that came in as well this week. I have one of our Delta One members, Ron, who's been around for a long time. In fact, he was back with us in 2017 for the original followers of my work back in the day. He runs a 7-figure portfolio for his personal PA. He had some questions. He said I could share a lot of them on the show this week. So you're going to want to stick around to the end of this show, because if you're somebody that is listening to this show and you run a larger investment portfolio and you're not just day trading, if you're building long short equity portfolio, there's a lot of questions that he had that I'm going to address on this show this week. Okay. The other positive news, this is a week of wins. For those of you guys that know, about 3 weeks ago, my father had to head into the hospital for an unexpected surgery. He went out of the hospital. Unfortunately, he caught an infection, a pretty bad one. So last Saturday, we had to rush him to the hospital with that infection. He was supposed to have his surgery on the 17th. The infection was pretty bad. We thought it was sepsis, and I was pretty much out for the entire week. Thankfully, he was released from the hospital yesterday, and things are looking up. And I'll tell you this, more important than money or anything else is health. And I just can't tell you guys that. You know, as you get older, you start to realize, I guess, at least for me, you know, things that matter. And that's a big deal for me is family. And we're happy to have him out of the hospital. I appreciate those of you guys that have reached out with texts and emails asking and checking in, but he's out of the hospital. We have one more surgery left. We're going to come back out of that one as well. And we should be on the road to recovery. Okay. So there's some life updates there for you guys. Really not too much to do. There's literally on my screen as I look right now, you guys can't see it, but there's a heat warning in Phoenix. Okay. So this is my first June. This is first world problems. My first June in Phoenix, I think 6 years. Okay. So before I moved to Puerto Rico, I would head to Vancouver, BC. For those of you guys that I have friends that listen to the show that live up there, beautiful place. I used to spend pretty much all summer from like 2016 to 2020 in BC. So this is my first summer back in Arizona. It's been 110, 106. It was 116 the other day. So don't feel bad for me, but it's hot. So that's what it is. So those are live updates for you guys. We have a lot to get into on the show this week. If you guys are new to this podcast and the article of the week, there's 3 places you can listen on YouTube, Spotify, just look for the LongVol Show, or Amazon Alexa, just say, hey, Alexa, play the LongVol podcast, and it'll pull it up. Okay, so that's it for this intro of the show. Let's get into some updates this week. We're going to get into a few things here, talk about the Swing Alerts portfolio, go over the report highlights for this trading week, talk to you guys about this trading week, and then give you guys an update as well on P&Ls from some of the subscribers, and then get into a quick reminder for the fall conference we're going to be doing in Phoenix as well. Okay, so let's get into that and start that part. All right, so as far as the swing portfolio goes this week, look, there were no updates, and I was out most of the week, pretty much every day. If my brother wasn't at the hospital, he had to fly down, or if I wasn't there, again, it was just busy. Okay, so there was no updates this week from what I remember. I think we had a position last week on Taiwan Semiconductor that closed. We have one other position that's still open. Had I been at the desk, we probably would have added another position to GXO Logistics because that was up 12% this week, and we're going to talk about that on the show. But other than that, there were no updates. If you're a subscriber to the Swing Alerts portfolio, make sure to go back and check and see what's there. I'll update you guys on some new ideas next week that are getting ready to inflect because there should be some ideas. Okay, if you're not a subscriber to that, it's our swing portfolio. We use deep in the money options. So instead of buying the equity and using the capital, it allows us to use time arbitrage. We use long-term options that are deep in the money. It gives you time on the position, and you can go on the website and look and see what it's all about. Okay, so that's the swing portfolio. Let's do the second part of here. Let's go through the LongVol report. Look, each and every week we publish something called the LongVol report. If you're new to this podcast and you're listening in the car, the gym, whatever you do, I listen to my podcasts when I cycle, and hopefully tomorrow morning, I'm going to try to get out at about 5 a.m. It's going to be 100, but I'm going to get out and get a cycle in because it's a good stress relief and I need to get a workout in. But I listen to my podcast when I cycle or I'm at the gym, whatever I'm doing. If you're on a podcast, you're not going to be able to see this, so imagine it. But I'm going to take you through a walkthrough of this report and show you how to get it. Okay, so number one, we've been publishing this report since 2020. You can go to the longvol.com. Go to the About tab, go to free samples. You can download 2 free samples there. Okay, this is a cross-asset investing report. It's not a trade ideas report. It's not a day trading report. We cover long, short equity ideas. Sometimes they're swing ideas. Sometimes they're turnarounds. Sometimes they're spinoffs. Pretty much something for anybody. Okay, so there's ideas in there. It doesn't matter what it is. You can access it all at thelongvol.com. Okay, so this week's report was number 24, issue 25. Will be out on Sunday. Again, you can access this on the website if you want to get a copy of it. But let's get through the report this week. We made some updates to this report every quarter. We'll typically go through this report and make updates. And the reason we make updates are twofold. Number one, it makes it easier for readers. And number two, as this report starts to grow, we released it 4 years ago, I came to the realization that most people are just looking for the investment ideas. Okay, and that's the reality. Most people don't do this like we do it 24/7, 365. Look, we run an investment management firm as well. I have an analyst. I have 2 summer interns, which have helped me with this report, and I'll talk about them in a second. But most people aren't looking to do research, right? It's just too hard to do. You may not know how to do it, or again, you just don't have the time. Okay, so people either outsource their money management to folks like us, or they buy research, and sometimes the research is too extensive. I know this because back in 14 to 15, when I was a PM, I would get sell side research. It was just, most of it was bullshit. That's the reality. Most of it was too long. And so I started to create an Excel spreadsheet. I still use this report to keep a concise, quick notes version of what I'm watching in the market. Okay. That way I'm not waking up doing stock watch lists or texting people, what do I do? Or getting on CNBC. We do all of our own stunts. And this is part of our research, okay? Issue 24 was titled Energy Names in Play and Pullbacks to Buy. Look, some weeks there's a lot to talk about, okay? Some weeks there's not a lot to talk about. I'm not one of these people, if you're new to this show, and if you are not new to this show, you kind of know my personality by now. If there's something to talk about, I'm going to talk about it. If there's nothing to talk about, we're just not going to waste our time, okay? And this is one of the issues I used to have with sell-side research back in the day. You know, every week they wanted to send something, and it's just not material information. At best, it just confuses you more, okay? So this week, I didn't have too much to say to you guys. Effectively, I was giving you guys a reminder in the report. I gave a shout out to Nathan and Charlie, who are our interns for our investment firm. Again, if you're an accredited investor or a high net worth individual and you're outsourcing your investment management, you can go to Bustamante Co. There's a lot of information for you there, minimum investments, et cetera, okay? But they're helping us this summer. They're helping us to update this report, and we did update the report this week with some new changes, and I'll talk about those as we go through the show this week, okay? So we had the FOMC and BOJ meetings this week. Look, our expectation was like everybody else. We didn't expect the Feds to cut. I do think They probably cut in September. That's probably the play here. So one of the things I've tasked them to do is I teach them, our process for identifying investment ideas is to start looking for more small cap and mid cap names. This was a theme for us coming into 2025. It was a bit delayed given what's going on with policy changes, etc. But the second task I had them go after is start looking at interest sensitive ticker symbols. Okay. So names that are going to be affected by a cut in interest rates. And again, part of what we do is we do our research ahead of time. We're typically early to ideas, just like GXO Logistics. But when these ideas come to life, trust me, they come to life. And some of you guys that we manage money for, you saw your portfolios this week with GXO, and it'll continue to explode as we get into Q3 and Q4. Okay, so there weren't really no big shifts this week in that. I did say the market needs to check back or reset. My broad market views. Look, when I look at the S&P, in fact, let's pull up a chart on this, and the NASDAQ. Look, this isn't really what I do. I don't really go over the broad market. And when people ask, if you're new to the show, if you're a passive investor, we don't really trade the market. Okay, we don't buy the names that everybody else buys. So I don't really read the S&P. Okay, I can give you a read from this from a technical perspective from early on in my career, and we do use price analysis as well. I think a lot of this is out of breath. Okay, that's my personal view. I don't use Bollinger Bands. Just by looking at price action and a few other things, I think these markets have to check back. And obviously, the past 2 weeks, there's tensions in the Middle East, and we're in a headline-driven market. Every time there's news out, the market tends to, positive news will rally, right? If the U.S. isn't going to intervene, the markets tend to be positive. If they do intervene, it looks like we're going to sell off. And that's a consensus right now. So what you're getting is indecision, but you're also getting price action with a lot of outside day reversals where prices rallying and trying to break out and failing. Okay. That's not a good sign. Okay. A good sign of a healthy market would be a little bit of a check back for us to rally. Maybe we get that. Okay. We have a weekend coming up upon us. We'll see what progresses with the Middle East. Again, I think the consensus right now is if the U.S. intervenes, we're probably selling off. Okay. If there's some resolution there, and like it or not, it's just, again, how markets work sometimes, we'll probably rally. Okay. And those are my broad views. We added back this report, the Cliff Notes. Again, I have friends that read this, and I'll tell you the reason we added this back. Look, the past 2 or 3 months, I had some old friends that got back into investing, and they have careers. A lot of you that listen to this show, that watch this show, you have careers, you have jobs, you have, real estate you do, you run companies, you do things, and that's a lot of our investors. You don't want to watch this all day long. Neither do my friends that do the same thing. So they'll text me and ask me what to do. The Cliff Notes version are ideas from this report that are of interest to me. Okay. There are names in this report that I'm not interested in. Okay. I don't build this report because everything in here is based off of Dan Inc. It's based off of ideas that the market, may take into play. So the Cliff Notes you guys can read in less than 5 minutes. We added this back. This is me at the Carvana headquarters. If you guys remember the story, that's me with my chain. That's my headshot. And those are the sheep there. Okay. So I said, given the shit show this week in the Middle East, tell me how you really feel. These markets are going to be moving. So that means trading the S&P, QQQ, and Russell. Okay. So quick kind of trader note for those of you guys listening to the show this week. Typically when you get volatility in the markets, you can just trade the index ETFs. Okay. And I know there's a big kind of demographic in the investing and trading world that believes you have to find companies to trade all the time. And that, in fact, that's what we do. When we build portfolios in our investment management firm, we try to build 6 to 12 high quality ideas. We're buying companies. I'm not buying the idea of war breaking out or war not breaking out. I'm not buying something because macro said this. We're buying quality companies, hopefully trading at discount, sometimes growth companies. We're buying companies that are turning around. We're buying something that's tangible. Okay. From a trading perspective, when there's volatility, you can just trade the SPYs, the QQQs, and the Russell because the trading range is widened. And when the trading range is widened, you can go in and exploit that. And you should exploit that if you are a short-term trader. Even if you're not a short-term trader, you can trade the options relatively small and pull out a little bit of change for the market. Okay. Some other names, the shitco names, Oklo, Hood, HIMS, and RKLB. Look, I'm short Oklo. Again, this is all opinion, not advice. If you guys are new to the show, make sure at the end of the video, if you're watching, There's our disclaimer. The disclaimer is also on the longvol.com. Look, they had a $1 billion shelf. They had a $400 million equity offering. The technicals I don't like either. This has probably got to go a little bit lower. I've been trading this long and short. I think for 2 months I've traded this. And for those of you guys new, the reason we call this shitco is because it's sad. It was down 7% today. I think it's probably got another 10% to go. Is because there's no earnings. They don't do anything. They don't. Let me take that. They do something, but there's no revenue. Okay. And when we invest in companies and build portfolios, I wouldn't take my money, let alone our partners, our clients' money, and say, look, let's go and invest in a company that's negative free cash flow, and let's see what it does. Okay. There's a lot better ways to burn money. And if you want to burn money, let's go and race Ferraris in the Corsa Clanti, if you guys know what that is. Okay. So that's that. Hood we like. We've been talking about this for a while. HIMS is getting ready to break out. I'll get into the charts later. Rocket Labs, again, another company. Not that I care about it long term. I could care less. What I care about is this thing starting to break out. It had a 7% move today. I think next week you're probably going to get a pretty big move as well. And this thing's on my radar. Okay. So when I come into the week, I put together ideas that are trading sardines. And if you guys caught the show last week, I talked about trading sardines. These are trading sardine names for us, and I'm happy to trade them long and short. And that's that. Okay. Energy names. Look, obviously energy's been in play with the Middle East, SLB, Valero, CVX, EOG. I mean, take your pick of the litter here. I like EOG and Valero because of fundamentals. I talked about the fundamentals in Valero, I think last week or the week prior. You guys got to forgive me. It's been a long week at the hospital. I just got out and caught up on sleep yesterday. EOG, I've liked for years. I've talked about it in interviews with the press and some journalists. I continue to like that name. We own those. Okay. Let's see here. They probably have more to go. Obviously, my views on this short term, I'm not worried about the fundamentals on any of these in the next 1 to 2 months. What I am concerned about, and this is what I would expect, if there is no continued conflict and it gets resolved, and I hope it does get resolved, is these probably gap down on that news. Okay. And that's one of the things you have to face. And I'm okay with that. Okay. Because our cost basis is lower and we have room. Okay. So that's that there. I updated on Boeing this week. I said, I hate to admit it, but given what happened last week, I was short the name the past 2 weeks. I covered, look, I don't want to see anybody pass away, especially my father this week. I'm telling you guys, it got pretty scary there for a second. And it's easy to talk about war and look at stuff on, a plane crashing, and you don't necessarily connect with it because you're not there. It's not your family. It's not your people. I was short this because of technicals. Okay. And I was talking about this. I talked to a friend about this. Look, I've been a Boeing bull since 130s. We've been talking about this since last October when they got with their union stuff done. I've been covering this for a long time. I think it's going to 240s. I talked about this with Phil Rosen at Opening Bell Daily on Easter Sunday. Literally, he called me, and I gave price targets at 220 and 240. We hit 220 literally not 3 weeks later. Okay, 218.80, $1.20, sue me. I think this is probably going a little bit lower because of technicals. And does that mean that we're worried about it? No. Okay. Does it mean if you're a long-term holder the next 3, 4, 5 years? No. If you're trading 30-day options or short-term call options, you should be worried because you're trading short-term and you don't have a long-term view and you're expecting market timing to work. And that's that. Okay. So if this pulls back, we're probably continuing to buy this. Again, this is all opinion, not advice. But again, some of our investors watch these videos and this is kind of their weekly update as much as it is us updating friends and people that subscribe to this report. Okay. So that's that there. As far as updates to the report, shout out to Nathan, the intern. He's done a great job this summer. And we added some things to the report. We took out a lot of names to this. He was doing some research for me. His research he sent me, he had all these bullet points. And I go, look, this is so good for me. Okay. Because he was sending me research and I go, look, this is what I want to see. Okay. I see a lot of ideas. I'm sure a lot of you guys do too. I don't want to sit there and look at 10 pages. Okay. And I've said this 1,000 times before. Warren Buffett said something similar. If I can't look at an investment idea in less than 1 page, there's something shady or it's too complex. Okay. There's 1,000 ways to slice bread in the capital markets. There's 1,000 ideas. Okay. Long, short, doesn't make a difference. I don't need you to tell me in 10 pages why you like this. I want to see things I'm looking for. And for me, this helps. Maybe it doesn't help you. It helps me. I can look at the financials quickly. I can look at the articles. I can look at keynotes. And at least as I scan through this, I can say, this is of interest to me. It's not of interest to me. Okay. In Oklo, I'm short Oklo right now. They're negative EBITDA. Again, the $400 million public offering doesn't help it. You don't need to be a rocket scientist to know it's going lower. Obviously, long-term, it's probably going to go higher. Okay. Short-term, it's not. There's a lot of money on the short side in creating alpha, and we're short this right now. And I'll continue to be short that. Okay. So he updated a lot of this. So did Nathan as well. This is a new look at the report. It's a little bit easier to read. And for those of you that want to dive into more fundamental stuff, if you want to do that, you can just use the chat room. Okay. And that's the whole point of this is people that want to do the work. And I mean, really do the work. I don't mean like, hey, I read a Yahoo Finance article. I went to Seeking Alpha and read an article from somebody that has $5,000 or no dollars at all, which is typically the case. And I'm going to invest into it, whatever. Okay. This is what we do. We run money. My own money is invested with our partners, and it's the easiest way. Okay. So those are the updates to the report. That's the update to the trading week. What do we have here? The SPY and S&P were sideways. Look, I don't really care about this. For those of you guys new to the show, and I took about 3 months off from saying this. I'm going to say it again as a reminder. The way we build portfolios, we try to build them so that our positions are not tied to the S&P. Okay. Now I'm going to put my foot in my mouth. Obviously in April, when the tariffs came out, a lot of equity portfolios, it doesn't matter what it was. Okay. The whole markets, Japan, Europe, US, obviously, everything pulled back, and that's expected. But typically in a normal operating market, if we build a portfolio that's not correlated to the S&P, it doesn't matter what the S&P does. Okay. So when people talk about, this is one of my pet peeves as an investment manager. I've done this for 2 decades. Well, I can beat the hedge funds. Then go beat the hedge funds. Okay. Go and raise money and take the $200,000 or $500,000 you manage now and go and run $50 million or $100 million. And let's see what you think in 2 or 3 years. Okay. So that's what I have to say there on that. The Fed held interest rates to basically flat this week. I think you're going to get a cut in September. That's my views on this. We're also monitoring some news from China, some stuff there. There was some data that came out today about chips, or some tweet came out from the White House. AMD, NVIDIA, a lot of these things reversed pretty nasty today. In fact, I don't know what the tweet was. I don't care what it was, to be honest, because these names aren't on my radar. But that's an outside day reversal. That's negative. This is a bad outside day reversal. On NVIDIA, this is previous high. You don't want to see this, okay? And that's that, okay? One of the other things, I'm going to talk about it next week. I'm just going to give you a sneak peek now. The Mag 7 names, yes, they've had a rally. I talked about this back in December in the Q1 of earnings growth slowing, okay? Everything that's not Mag 7 will outpace Mag 7 earnings into 2026, okay? So you can rewind what I said. You can go and Google it, Grok it, ChatGPT it. A lot of those other names are going to catch up. Into the Q3 and Q4, I'll update a lot of our investors that listen and watch this podcast. We're going to be adding new portfolio positions. We reduced a lot of our exposure as we get into Q2 because we're booking gains, because we have new core positions that are going to go in the books. But these aren't names that we're interested in. In fact, you look at the price action on a lot of this stuff, it's kind of, it's up, but it's after the tariff kind of pause, it hasn't done much, okay? And that's good for us because we don't track the broad market, okay? We look at companies like GXO that nobody was talking about. In fact, I just tweeted out about an hour ago, someone on CNBC, not that I watch it, I have alerts set on Google, so every night, companies I'm looking for, if there's news, I get an email, I'll scan through the email. Someone on CNBC suggested GXO. I think in the coming weeks, it'll get more airtime. Okay, I'm going to leave it at that. Let's move on. Okay, so that's that there. That's the week in review. Let's talk about one of the other wins. Talk about GXO Logistics. All right, sorry, I had to cut that out because something happened with the sound there. So let's get into GXO Logistics. GXO Logistics this week announced not only a new CEO, they announced the approval of the Wincanton acquisition. I'll explain all of this in a second. They also came out and raised their full year 2025 guidance, and I'm going to talk about this here briefly, okay? One of the weirdest things, and I've done this for 2 decades, and I've seen a lot of weird things in the markets. If you guys remember this movie, Blade Runner, okay? there's this scene here, and he's explaining things, and he goes, I've seen things, okay? Then the guy dies. If you get the joke, you get the joke. But what I'm saying is I've seen a lot of things in markets, a lot of crazy things. I saw oil go negative in 2020, which I thought I'd never see, okay? I would never think that a company would buy a company. They bought an acquisition. Then the regulators from the UK, the CMA came in, and they go, look, we need to review this to make sure we're going to allow this to happen, okay? So we've been waiting on this, I don't know, for 8 or 9 months, maybe more. Again, long week. But this week they came out, they approved it. The stock was up 12%. I've been talking about the approval in the start of June. I updated everybody. You guys should have known about this. We got the approval. We also got a new CEO as well. And here's what they said on the press releases directly from the GXO website, okay? The Wincanton it's approved subject to the divestment of a small number of grocery contacts in the UK, and that integration will be permitted with the vast majority of the Wincanton businesses once certain administrative conditions are met as well, okay? So minor things, it's done, whatever, okay? The company also announced, this is another positive, you got 2 for 1 today, that it's raising full year guidance on organic revenue growth, adjusted EBITDA, and adjusted diluted EPS, okay? So you got 2 for 1 today on this announcement. The stock was at 12%. I think it's just starting to inflect. Nobody cared about it 2-3 weeks ago, just like nobody cared about Boeing at 130, 140. And now that there's good news and people read on Yahoo Finance and Apple News, and again, good headline buy, bad headline I sell, everybody will start paying attention now, okay? Organic revenue growth is up from 3 to 6%. That's a big plus for this company. For those of you that followed in the first quarter, the analysts kind of looked down upon the company. They were worried about organic revenue growth. Analysts always get it wrong. The stock gapped down in Q1. Literally, I told you guys this story. I never buy positions, options, whatever, okay? When we buy equity positions for portfolios, I've done this since I was a PM back in 14 and 15. One of the things, and again, this doesn't matter if you're trading like 15K, okay? If you want good fills and you're trying to fill a larger order, you want to wait, okay? When this gap down on earnings back in February, I'm telling you, I didn't wait 3 minutes, okay? I saw the news, like, this is stupid. The analysts got it wrong. The markets got this wrong. I bought this. And we've held this since then. Again, nobody cares about it. You've got the rally here today up 12%. People will start talking about this. Analysts are going to come back. They'll start upgrading this name. It'll start getting more media coverage. And Brad Jacobs, who owns this company or founded the company, if you don't know who he is, by the way, you need to do the due diligence. And don't just read one article. Really understand who this guy is, and you'll understand what he's done, okay? This is just getting started. It's a big deal, but the revenue growth, the organic revenue growth is a big deal, okay? Adjusted EBITDA is up as well. Adjusted diluted EPS is up from 240 to 260. So what else could you ask for, okay? If that wasn't enough for you guys, they announced a new CEO. Not that they fired the old CEO. The old CEO was going to leave. They announced a new CEO as well. This also came out effective August 19th. He'll be taking over. This isn't just some random guy they pulled off the street. Okay, if you guys remember Kohl's, they brought in this kind of scumbag who was fired in 6 months. Okay, look, a lot of this nonsense exists all over Wall Street. You get good management, you get bad management. More than not, you get terrible management. Okay, luckily for all of us as shareholders in the company, you have a chairman in Brad Jacobs that actually cares about his partners, because you're equity partners. When you invest in these companies, you are an equity partner, okay? And you've got a good CEO. The guy's been in the business for 33 years, worked at DHL. This is literally all he's done, okay? So you got a good CEO in place, and we're ready to rock. This company is now getting ready to inflect. Back in October, they had a buyout at 65. Jefferies confirmed the buyout. GXO rejected. I told a friend this 2 months ago. So why would they reject the buyout, okay? And you have to understand this. And when you're Brad Jacobs or you're somebody that's been in this business for a long time and you understand valuation, just because there's a windfall, you don't take the money and quit. And this is one of the things, I'll give you something that might relate to a lot of you guys. I heard this a long time ago, early in my career. People will go, well, why do you do this if you make money? And I go, okay, so if you make money, you retire or you stop making money? What are you supposed to do? Okay, this guy's a billionaire. He still does it. The point is, they didn't take the buyout because it wasn't worth what the value of this company is going to be worth. That's why, okay? So at 65, 63, who cares? We think this is doubling up. This is just starting. Again, this is all opinion, not advice. Do your own due diligence. Be smart on this, but we think it's just starting, and today was the start, okay? So that's that there. That's the update on this. This is a quick update on the report, letting you guys know that we reduced the ticker symbols, and I think that's for the better. For those of you guys that actually want to go into other idea generation, it forces you guys to submit ideas and put ideas out there instead of being reliant on us. Because look, I don't mind, but the reality is 95% of the idea generation is derived from us, and we're cool with that. Obviously, you guys pay for the research, but when we built Delta One, the idea was to bring on people that would help us on the research side. Okay, I have a friend, and some of you guys know him in Puerto Rico, runs about 350, 380 million now. He has a research report mainly for big hedge funds. But a lot of his idea flow is from the community. Okay. So it gives you more eyes on companies to track, and this will help us to do that. Okay. So that is that there. Those are the quick updates. Let's move on to the LongVol Investor Conference and a quick update here. Okay. Some of you guys have registered for this. If you don't know what this is, we tried to do this back in Puerto Rico. I spent half of the year there. Obviously, I'm here now because my dad's health. November 10th through the 14th. It'll be a lot easier. It'll be in Phoenix. This is a Biltmore golf course. We're either going to play the Biltmore or Papago. I'm not sure. Probably Biltmore. That's probably the move here. We'll make a group decision. We'll play golf on Friday. We'll do the conference Monday through Thursday. Friday evening, we're going to be doing a renting out a part of this bar, this swing spot. I've taken some of you to it. You guys can register for that. All the information is on the website. In fact, if you click this, and if you're listening on the podcast, just go to the longvol.com, click on Fall 2025 Conference, and there's a PDF there. It explains what we're going to go through. All of it's there, okay? And look, I've done these before. Back 2017 was the last time I did one. I know what I'm doing on this. You guys will enjoy it. We'll get through it. We won't waste time, and you guys will learn something. You guys will be able to network with others. You'll play some golf. We'll have some drinks, and it'll be a good week, and it won't be 116, okay? So that's the plus there, okay? So that's that there. Let's move on to some highlights this week. We do it every week on the show. We try to highlight people that share some P&Ls from our room, not to flex, but just to, again, when you put in the work, it's cool to do a quick victory lap. Okay, this is Will, one of my friends from LA, QQQ Spy and Valero. So he read the report this week. He traded the vol on the Qs and Spies. Valero's been a name as well. And again, not a bad week. It's better than a stick in the eye. So congrats to Will. This is CK. Always, he's one of the 5% of the 95% that tends to contribute to a lot of idea flow. Hims and Chewy, good week there for him as well. Again, better than a stick in the eye. And that's that. Okay, so congratulations to both of you guys there. Let's move on to the conclusion, and then we'll get into the headlines and the rest of the article of the week. Okay, so as far as this week goes, just kind of sideways action. Okay, we had options expiration and quad witching today. I don't really mess around too much on quad witching. The one thing I had to do today is babysit a few positions. Okay, so some of our portfolios outside of our core positions, if you're somebody that's listening and you're wondering, hey, look, you know, do we want to work with this firm to invest our money or to manage some of our money? Not everything we do is holding companies for 10 years. Okay, in fact, we try to hold companies for 3 to 24 months. Okay, that's typically the MO. The cash that sits in the portfolio, we'll do event-driven stuff, short selling here and there, but it's all small or tactical trading. And one of those tactical trades was Microsoft, and I had a pretty big position this week on this. I had to watch it this morning. So this morning, coming into this, we added to the position. The P&L started to take off pretty big because we had some deep in the money options, some longer term options, and the order flow today was just a little bit weak. Okay, and I had to exit this position. It was kind of a pain in the ass to get out of it, but you know, when you trade short term, you got to watch it. Okay, and this is why for those of you guys listening or watching the podcast that think that if you're managing 200,000 and you're going to manage a lot more, that it's not the same thing. Okay, and that's why when we invest in GXO or Boeing or other companies I'm not going to go into, I can sleep easy at night. Okay. I don't have to wake up and watch the 1 minute chart or overnight high or overnight. I don't have to worry about any of that stuff. I put the positions on and I leave them. Of course, I check them. Okay. But when you trade short term, you better be seated in the seat and you better be paying attention because it's important. Today, Microsoft, I had to sit there and watch that. Okay. There are some other names as well in Hood that I had to pay attention to, but what I'm making the point of, I normally don't trade on quad witching. And I wouldn't have today if we didn't have those positions on. Okay. So the Middle East situation creates headline risk and whipsaw. Okay. What I mean by this is this. Right now, the markets are driven by headline risk. So if we get a resolution to this conflict, whatever you want to call it, the markets will rally. If we don't, we're probably selling off. Okay. So what that creates is a binary situation in the markets. If you look at the charts, you're either going to rally hard or you sell off hard. Okay. There's no in between. It's not like, like a Tesla. Okay. You hit the gas, you're going to move. You're going to get a big move. Okay. And I don't like being in situations like that. Not that our portfolios are built around that and not that we generate investment ideas and like, oh, they're going to go to war, not going to go to war. We bought these oil stocks because of fundamentals. It just so happens this thing popped off. Okay. And that's an important to understand for those of you that are new investors. If somebody sent you this podcast and you think that we generate ideas based off of that, we don't. It's just not how we operate in our world. Okay. But the point is headline risk is going to affect things. Do I generate a trade idea off that risk? No, I don't care. Okay. I'm not going to place a bet with hundreds of thousands and millions of dollars guessing whether there's going to be war or not. Some people do it. I'm sure that they may do it, but they won't be around for long. Okay. Number 3, not a fan of the overweight, the broad market. I think the broad market's overbought regardless of this war or not. I think a lot of these tech names are still a little shifty in my view. I don't like it, which is why I've been trading these names cautiously at the highs. Okay. I'll just leave that there. HIMS also remains on a watch for all new time highs. I'll talk about that later. The quote of the week is from Warren Buffett. The best investment you can make is an investment in yourself. The more you learn, the more you'll earn. Okay. One of the things I told the interns this summer as we started our project, them helping me with the report, them teaching them about the interest rate cycle, is I said, look, when you guys are done with your internship, whether they stick around with us for the summer and beyond, or we'll see, or they go off to different careers after they graduate, is you got to figure out what it is you want to do. Okay. Not everybody has to be a cross asset investor. What we do is cross asset investing. I don't consider myself a value investor. I don't consider myself a day trader. I don't consider myself a commodities investor. I consider myself cross asset. What that means is we trade majority equities. Okay. It doesn't mean I won't trade equity ETFs. Doesn't mean that we won't short sell. Doesn't mean I want to go after value. We look to generate alpha in any market, in any place in the world, long or short. It doesn't make a difference. Okay. At the end of the day, if we have a framework and we understand the situation, we'll allocate capital to that situation. But the point with this is you have to understand what you're good at, what you're not good at. And once you understand that, and it takes time, by the way, then you can start to operate from a point of being more confident in what you're doing. But you don't know that, okay, until you actually try to learn things and test things, okay? That's really, really, really important. I can't stress that enough to any of you, okay? So that's that. Let's move on to the headlines of the week and talk about a few things there. All right, so headline number 1, the world is bracing for what comes next in the Middle East. President Trump is weighing options for Israel-Iran conflict, and the White House insists that any Iran deal needs to be no uranium enrichment. Okay. Look, I have a lot of thoughts on this that I'm going to spare you guys on this show. The thing with this is you don't know what is real and what's not. Okay. And neither does the market. And that's obviously an issue with a lot of things right now, considering that. And that's what drives the headline risk. Okay. You're getting this news coming out, and you don't know what to follow. And the market whips around because of this. And if you're trying to day trade this or buy things that are affected by it, it makes it a little bit harder. And that's just the world we're in right now. So all eyes are on the White House as U.S. President Donald Trump weighs carrying out military strikes on Iran. What else did they say here? They had a meeting, I think, in Switzerland today. The Kremlin came in and said, hey, intervention in Iran would set off terrible spiral of escalation. Then the guy from North Korea, he chimed in as well and said something. Then Trump said, I may do it, I may not. Nobody knows what he's going to do. You have Israeli TV saying he's going to do it. Then he's saying he's not going to do it. Then it's 2 weeks. Nobody knows what's going to happen. And that's the problem because, again, right now, I think the sentiment trade is, again, we don't do this, by the way. I don't care about placing trade. I have to keep reiterating this because some people, they don't listen. And I get questions that come in on the show. It's not what we do. But if we get involved, we're probably selling off. That's the sentiment. And I don't want to be involved in that trade. I'm not interested. I'm not interested in coming in, buying puts and be like, oh, Monday's going to be a sell-off and betting on that. It's just not what we do, okay? And if you think that you're going to go out and run investment money for people that have worked hard to make that money, which a lot of our clients have, okay? Our clients are entrepreneurs, business owners. They've worked hard to make this money. You don't want to lose it, okay? I don't want to lose my money. My money's invested with it. I'm not going to sit there and bet on a Black Monday with $100,000 of put options that may or may not work. Okay, so we're waiting to see what happens with that. I can only say I have the greatest respect, blah, blah, on this. So basically, there's just, again, we're trying to figure out, like everybody else, what's going to happen. It doesn't help the situation. Second article, mortgage rates dip. Home buyers and sellers are gridlocked. Let's keep this quick. I don't want to go through it because we're at 42 minutes already. Look, I think this is going to get a lot better for home buyers soon. I think that the home sellers who are still too hard-headed, like people who buy stocks and don't want to sell them or take profit because it's the first trade they've ever made. I think the home sellers are going to get their asses handed to them and carried out in a stretcher because they're too greedy and unwilling to drop their prices. I'd be concerned if I was them because when rates do drop end of the year, which they should in my view, you're going to have more supply in the market. Maybe the demand's there, maybe it's not. I don't know. But I think it's obviously a buyer's market. The real estate agents out there should be excited. And hopefully you guys can get back to real estate and away from prop trading futures. And I'll leave that there. But that's that. Let's move on to the next thing on this because, like I said, we want to keep these shows short. Microsoft cuts thousands of jobs. I don't have a lot of commentary on this other than I was trading it technically. Microsoft for me is a trading sardine. I don't invest in that company. I don't care, okay? Everybody in the world looks at it. I'm looking for companies. We're looking for companies where nobody's paying attention to or there's an identifiable turnaround or catalyst to fix a company in the next 3 to 24 months. Okay, so don't really care. Robinhood is launching a new tool to lure traders. I do care about this, and I have a few comments, okay? Robinhood is up tremendously since April. I've traded this back and forth for quite a while, okay? We're at 78 and change as of close today. I think it's probably got another $5 or $6 in it before it pulls back technically. I think long term this thing's going to be fine. You're not going to catch me continuing to buy the breakout here, but I'll trade it, okay? The one thing I did see in this I thought was interesting, again, was they were going to add a preview to let people see simulated returns before they place an options trade. Obviously, options trading the past 5 years has exploded, okay? And I don't think it's slowing. That's a reality. I didn't like it a long time ago. But the reality is this, is that there's so many new investors because of Robinhood that they buy the shitcoats, they buy the meme stocks, and they don't know what the company does, okay? They couldn't tell you what the balance sheet is, what a multiple is, and instead of getting mad at it, it's better to just exploit it. And that's what I've learned. And this is why we introduced the Glue Eater Index, because a lot of these names that are absolute shit, they're shit companies, are moving 40%. And instead of sitting on the sidelines poking fun at it where we've been trading it, I'll continue to trade it over and over. And I hope that Robinhood sticks around, okay? Because as long as Robinhood sticks around, whether we want to call it dumb money or not, it's money that I like, okay? Because that dumb money is making me money, and let's keep them there, okay? So let's leave that there. Imports, I'll skip that. this was of interest to me. Waller basically came out here on Friday and said that a July rate cut could help Powell to keep his job. Look, I don't think Trump's going to fire him, even though he's kind of bad mouthing him. This guy's probably the next Fed chair if I had to guess. I don't care. Don't shoot me if I'm wrong. I'm not one of these macro folks. I know some of you guys out there that go and listen to the guys who have whiteboards in the macro. I don't care. Okay, I'm here to make money. I'm here to make my investors money. I don't want to argue about shit that doesn't make anybody money. But I think this guy is going to be the next Fed chair. He basically came out this week and said inflation is running very close to the central bank's target, allowing for the possibility of a good news rate cut this summer. However, the process would be gradual. The bank can monitor what happens. And look, I think they should, okay? I think they need to get to this rate cut in July. I don't think they're going to. I think it's going to be September. But my view is that you can cut rates if inflation starts to tick up. Guess what? You can hike rates back up. That's it's not that big of a deal. These guys can do whatever they want. But Powell is sitting there and getting a little selfish on this. Okay, I'm going to leave that at that before I go off on a tangent. All right, so that's that. The point is, I do think there's going to be a rate cut. I think you should be looking at inflation sensitive ticker symbols and ideas based around that. In fact, we've already started. I tasked Charlie and Nathan to start looking at names. In fact, next week, as we go into the third quarter and I send out our investor letters to our investors, I'll have the guys go through the portfolio and I'll explain to them why we're putting these positions in and talking to them about that. All right, so that's that. Headlines of the week. Fear and Greed Index is at 56, and maybe that drops a little bit, but that's coming off the highs quite a bit. I saw this week. I care about it next week. FedEx has earnings. In fact, FedEx has, I believe, a spinoff. And the reason this caught my eyes, we had it in the report in the special situations, because they're spinning off the freight line, which is expected to complete in 2026. I'll track that freight line next year. And for those of you guys wondering what event-driven investing is, that's an example of it. All right. So literally sitting here in 2025, when that gets spun off next year, that'll be my radar. All right. So I'm watching FedEx for a number of reasons. They have earnings next week. This basically says the casualty of the Tier 4 is no more free deliveries. And obviously, I think that's going to be in effect. And I want to watch this next week. The other thing I'll talk about later in the charts, in fact, let's just get to it now. The expected move next week, I believe, on FedEx is like 9 or 10%. The stock's trading 226. What does that mean? It means you're going to get a big move. All right. I mean, I think this thing, if it's positive news, you're trading the 240s, 250s. And this thing has been down pretty bad since the start of the year. In fact, since November, this thing has been down 35%. All right. I'm not a big fan of this. Obviously, we own GXO Logistics already, and it probably won't be a holding we're going to hold for too long. But I'm interested into earnings next week because of this headline and other things as well. All right. So cold stocks, I saw this on Twitter. Somebody sent this to me. Oscar was one of those cold stocks. If you guys remember this week, Oscar was up. I don't know what it was. Okay. I had a buddy of mine. Love the guy. He's a guy's guy. Good friend of mine I've known for a long time. He pitched me on this. I talked about it in the show a few weeks ago when it was at 14. The stock's now at 22. It became a hit overnight. I didn't like the balance sheet. I still don't like the balance sheet. Look, I saw it up last night. Obviously, yesterday was a holiday. I texted him. I go, hey, look, Oscar's up 14% in after hours, and he made a lot of money, okay? I'm not mad at him. I'm excited for him, right? We were pumping him up today. I was texting with him. He made a ton of money, and I'm excited for him. I don't have any FOMO on this. It doesn't make a difference to me. It wasn't a company I was interested in. And look, will there be more? Yes, okay? There's plenty of glue eater stocks out there. I don't think Hims is a glue eater stock. Let me be clear. I actually like that company in their balance sheet. I like Robinhood in their balance sheet. The rest of this stuff, you guys know how I feel about Carvana. Everybody feels about that. These are all either glue eater stocks to me or they're trading sardines, okay? The positive is all these stocks, okay? Look at the PE ratios. Look, it's so silly. And we can sit here and argue about this over and over and over and over. But the reality is this, and this is whether you accept it or not, The retail investor doesn't care about anything other than up or down. That's the truth. Okay. And instead of arguing with them, I'm trading what they trade. I'm trading it. Okay. And I hope they stick around. And that's a reality. And we'll continue to do this. And hence the Glue Eater Stocks Index. All right. So that's that. Let's move on to this. Why do we put this in here? Whatever. It's funny. This guy's, look, the guy's loaded, but not a good guy in my view. All right. So that's funny because he asked what ticker symbol to use and it was scam, which you guys know. If you guys know what this is, you know what's up. Okay. So that is that. Let's get into the next part of the show. Talk about GXO and VF Corporation. All right. So GXO Logistics is inflecting. What does that mean? Okay. Typically when companies start to come out of a bad path or they turn their quarter to the right situation. So Oklo, for example, if Oklo turns a corner, it'll start to inflect. GXO is at the point where it's just starting. It's just starting to inflect. It's up 12% today. There's a lot more to go. And again, I've shared my views on this. This was their first quarter earnings from just recently in May. For those of you that are paying attention, first quarter revenue is up 21% year over year to $3 billion with organic revenue growth of 3%. That'll likely continue. Obviously, they raised that this morning on that press release. Sales pipeline is $2.5 billion, excluding the Wincanton deal. Okay, so the last earnings, because the regulators didn't approve this, that wasn't included. This will be included in more than likely the next earnings report. You can only imagine what that does to the overall valuation of the business. In addition, they've been repurchasing shares. They repurchased 2.8 million shares in the last quarter. Again, if you don't understand how that works, obviously it helps your valuation of your ownership in the company when management is buying back equity. They're not Carvana. They're not selling their shares into you. This is a management team that actually cares about you. Yes, grifts exist. This is not one of them, in my personal opinion. Okay. We signed $228 million of new business in our pipeline, excluding Wincanton. Obviously, that's coming online here and with the approval, and it's only going to go up, in my view, from there. All right. So 3 quick notes on this. World's largest pure play contract logistics provider. GXO Logistics is the global leader in contract logistics, managing outsourced supply chains, warehousing, reverse logistics for blue chip clients across 27 countries with 1,030 facilities in 208 million square feet of warehouse as of December. Number 2, strong customer base and industry focus. They serve companies like Apple, Nike, Boeing, which we love, Nestle, capitalizing on trends in e-commerce growth and outsourcing. Number 3, recent growth and acquisitions. Completed acquisitions of Wincanton in 2025 until the UK came in with their wacky review and said, look, we have to review this after you already bought it. They obviously approved it, and they raised their guidance as well. Okay, so all the tailwinds are there for this company to improve. They got the new CEO. They got the Wincanton acquisition done. And all these analysts that got it wrong are going to start coming out the next month or two. The stock will start getting upgrades. People will start talking about it more. Journalist coverage will get on this company. And this company will continue to perform. And, we have price targets where we think it's going. And it's much higher from where it's at now. All right. So that's that on GXO. Again, this is all opinion, not advice. Please do your own DD. Let's move on to the next point. The Vans Warped Tour is absolutely back. If you slept under a rock as a kid, or if your parents made you walk around in a bubble, then you don't know about this. But the Vans Warped Tour is back. They had a delay on this in 2019, but this is now back. This was started back in 1995. They kicked this off this past Saturday at RFK Stadium. Mod Sun, Mayday Parade. I don't know who these people are, which shows you how old I am. Sublime Cartel came out. MGK, I know who that guy is. He's the ex-rapper who turned pop star and paints his nails, which, whatever. If you got to sell records, you got to sell records. What else here? Simple Plan, Less Than Jake. Even Avril Lavigne made a surprise debut, and this is back, okay? Look, this is a big deal for the Vans brand, and it's part of the entire turnaround story of this company. And obviously, Vans is just one of the companies that VF Corporation owns, but Vans is a big part of that portfolio, and we want to see a turnaround in that particular company. All right, so giving you guys a quick background on this. Sun Cho, if you don't know who she is the president of Vans. Daryl Brackett brought her in. If you don't know who she is a rock star. I've talked about her before, And let's get into a quick background so you guys can get an understanding of who's running the company. That's really important. Again, it's not your friend who took a Grant Cardone course or read Robert Kiyosaki coming in and is now going to run this large multi-billion-dollar brand. Okay, so from 2016 to 2024, she served Lululemon initially as a senior VP of global merchandising from 2018 to 2024. The CPO during her tenure transformed Lululemon into a product-led organization, quadrupling revenue, strengthening profitability, and expanding into new product lines like footwear and new markets. Okay, she knows what she's doing. She did a very good job there at Lululemon. And if you look at Lululemon stock for the time she was there, it absolutely mooned. And unfortunately, I was not in it at that time. Okay. Second thing, she talked about this at their turnaround strategy in the investor day in March. Okay. She came out and said a lot of things. This is also on their website. You can read it there. She said she plans to return to Vans' growth by focusing on women and younger consumers, reclaiming the brand's skateboarding roots, which again, this was started in 1966 in Southern California as obviously a skating brand, enhancing the product offerings to attract these demographics. She emphasized building high-performance team and creating designs that resonate with the Vans identity. Okay, this is really important to a brand for those of you paying attention. If you guys go and look and see what happened to Victoria's Secret, okay? Victoria's Secret tried to sit there and pretend that they were something they weren't. And it cost them a ton of money. And not only did it cost them a ton of money, it costed their shareholders a ton of money. And you know, that's what matters. The board members didn't lose money because they never have skin in the game. They sit there, they show up 4 times a year, they collect their checks. The CEO, the C-suite collects their check, and they could care less, okay? The people that lose are the shareholders, and the shareholders were carried out in a stretcher because of this nonsense. She's going to get this back to where it needs to be, okay? She also said this in the turnaround plan at the Vans thing, that she has a personal affinity for Vans, citing her punk rock roots and love for the brand from her youth, which she believes will help her inform her approach to reconnecting with the Vans core audience, which I think is a big deal, okay? This woman is a rock star. This is the start of this. This is just getting back in full swing. And again, I've said this in January when they hit $26 a share. I thought this would go from a turnaround story to a growth story. I think it's back to a turnaround given the tariff situation. But once we're back at 26, 30, 35s, and they get this company turning around the next 1 to 3 years, I think it turns into a growth stock eventually as well. Okay, so that is that. Those are some updates. This has been an incredible week for the markets. And like the title says of the podcast, this is a week of wins. And sometimes the wins come all at once. Sometimes we have to wait. And we get paid to wait as investors, even if you're a trader. The longer you wait and the more patient you are, the more money you tend to make. Okay, so that is that. Let's move into a few charts. I'm going to keep this short, and we'll get into the Q&A for this week because we're at 58 minutes. And I have some questions from members to get through. Okay. All right. So Tesla, CVX, and FTX. Let's go through a few things here. Tesla ready to break out. Look, for those of you guys new to this show, look, I do use price analysis. This comes from my career as a futures trader a long time ago. It's not what we do. I don't want you guys thinking, oh, we make investment decisions off this. We're trading companies. We're buying the balance sheet. I'm not buying Vans or GXO because the fettuccine levels or the MACD or the fungulator, for those of you guys who know the joke. We're buying the company. We're buying the balance sheet. We're buying the management. When I look at a company like Tesla, there's obviously a quantitative approach to this. I promise you it's not a buzzword. And to give you the quantitative approach, this company moves pretty violently because of the beta in this thing. It's connected to so many ETFs. The options flows cause this thing to move. And because of that, it can be exploited. And the way it's trading recently, I think you're going to get a big breakout. You have earnings on July 14th. If you end up breaking above 358s on this is trading 400s in a second. If that breaks, you're trading back to 280s. Okay. The point I'm making with this is I don't think this is trading sideways. I think this is setting up for a very large move in one direction. I don't have a position. Okay. I'm not going to bet on the direction. We use something called triggers when we trade short term. If I see the move happening, I'll start to initiate position. This isn't a trading class on technicals. It's a quick view on some of that. Okay. Chevron, we've talked about this. Again, we own this. And look, this is traded a halfway back from the highs on this to 150. 154 is May trade if things escalate in the Middle East. If we don't escalate, we're probably gapping down. Either way, energy has been on our watch list for a while. EOG as well. I've talked about this for 2 years with you guys. These guys have been conducting massive share buybacks for the past 2 years and divvy increases. Okay. The problem with this company is it's been trading in this range, I don't know, for the past 2 years. We trade range highs, we trade range lows. This monthly candle starting to look pretty good. Okay. But every time it's looked good, it's kind of let us down at the highs. I'm hoping this time we start to break out and we go after all-time highs. Okay. I think you may just do it. I'm already long this. If you're a reader and understand what we do in price action views, you know what's up at 130. Start paying attention to this because it's setting up, just like Valero set up, by the way, a few weeks ago. Okay, so that's that there. What else did I want to go through? FedEx, I'm going to skip because of time. We don't have too much time this week because we're already at an hour, and I have some questions to go through. Okay, I'm going to go through Hood quickly, or sorry, HIMS with you guys quickly. Look, I've owned this company from 6. We bought it on the index ad, and I own a position again on this. My views are pretty straightforward. Aside from the balance sheet on this thing is consolidated pretty well here. I think it would have taken off today. Yeah, it was up 5% today, but a lot of nonsense in the intraday action. If it wasn't quad witching, I think this thing was at 75s today. This company has the ability to run, if you guys look at it from 26 to 73s, in an instant. Same thing here. This isn't a company that, takes an ambient and it's like, hey, look, I may or may not move today. This thing hits the Peruvian marching powder and it takes off. Okay, so I think this was probably 80, 85 pretty damn quick, unless you break 54s on this. But given the way this thing closed this week, again, it's a shit co, if you want to call it that. It's a meme co, whatever you want to call it. This thing moves when it moves, and it's right on the verge. Okay, so those are my views there on that. And I think that's that because we're at an hour 2, and I have some questions to get through. Okay, so that's that for this week's article and podcast. This is the Q&A section of this show. I'm going to go through a few here. There's one from my buddy. What did he say? Okay, Dan, I think after today's $4+ trillion option expiration, quad witching, we can be sure the majority of options bought or sold in relation to Trump's obliteration day are now dead. By the way, good call on GXO. What are your thoughts on this given quad witching being done? Then he sent a chart of 3 misconceptions of the U.S. debt. Okay, so number one is this. Obviously, the debt is a big deal. It doesn't make a decision into our investment process. We're buying companies. The best way I can equate this to those of you guys listening or watching this week, I consider what we do with our portfolios private equity and public markets. Okay, if I were to invest in a private company, which I've done before, we took one out of bankruptcy in 2020, not in the hedge fund, but personally with my own partner, the old partners at the hedge fund I worked for when I was younger. If we're buying a private company, we're looking at the management and the balance sheet. I'm not looking at MACD and Bollinger Bands. We're buying shares in an entity, in a company. So I don't care what the national debt is. It has no bearing on what we do. That's number one. Number two, the options expiration has no bearing on investment generation idea. It doesn't make a difference to me. I don't care about these options. It doesn't make a difference. I don't care about call walls. It just doesn't. It doesn't play a role in our decision-making process for our active trading business. It doesn't. And it may for you, but it doesn't for us. So that's it. Okay. Another question came in. Look, this came in late. I saw it earlier. I replied to you. Look, I can't tell you guys where to buy or sell on QXO. You guys have to make your own decisions. But the question effectively, where is it? No, this is the wrong email. That was from Matt's text. And I replied to you late too, but you sold the leaps on it. There's a question that came in, basically the same question. Somebody was asking on GXO Logistics whether or not they should sell the leaps and keep the shares on that move. Look, we buy equity, okay? Obviously, there's options on short-term stuff, but we buy the equity 99% of the time. Sometimes we augment that equity with options. Whenever we get moves like this, I'll sell some of our leaps to capture some gains, and we keep the equity, and we'll trade around the position. I think this is just getting started, and I'll leave it at that, okay? Question on Hershey's. Hey, Dan, I know you talked about Hershey's, and you updated it in the report a few weeks ago. Are you still paying attention to that particular name? I was looking at the chart. You're at the 50. Do we still like it? We still like Hershey's. I haven't changed my view on this. In fact, I took a position on this and I cut it. But we still like this. You have earnings coming in August, and yeah, we like this still. Again, this isn't. I'll talk about it in the community on this, but we're still good on that. Okay, so that's that for those questions. I had a question come in. This is the main one I want to get to. Not that the rest of them were less important, but there was a question this week from Ron. There's a second question. By the way, we used to have a Substack, and somebody's pretending to be me on there, asking for money. Number one, I would never ask you for money unless you were an investor in our investment firm. I have no issue doing that, okay? But I'm not asking you for like $1,000 or $500. So there's somebody scamming on Substack, which I don't know why. I'm a nobody on there. All these TikTok guys are more professional and ballers than me, so maybe they should steal those guys' identity, but it's not me. The other question from Ron that came in is this one. You also said I could share your portfolio. And you had a few questions. Okay, I'm just going to read it and I'm going to pull this up. Dan, what I just sent you is all positions for the year so far. These are 3 tabs in the bottom of the spreadsheet. Look, you and I already talked about this. I'm going to talk to you off air. I'm going to use this to answer 2 questions and show the viewers something. This is the active portfolio, which our current position is still going. Also realizing unrealized values at the top of the page. Tab 2, the realized P&L, all trades for 2025. Tab 3 shows the equity curve. I'm not going to say the amount in million and change in the account, but it doesn't mean I'm leveraging every penny. My biggest risk is 10 to 12 per trade, 4 to 5. I don't have strong conviction. Here are my concerns. I think I have too many positions on, 19 in total. Between what you alert us and what I find on my own, I think I have too many trades on, okay? Number 2, I also don't believe I have enough shorts on, 18 longs to 1 short. So I'm going to answer number 2 first. The second quarter hasn't been good for shorts in my world. I know there's been nasty shorts out there and the deep shorts. I met these guys from Capital. I'm in their community. I was on their podcast. They do some short. I haven't seen a lot of shorts I've liked in Q2 myself. Okay. So don't worry about that. Sometimes they line up. Sometimes they don't. This hasn't been the quarter for it in my view. So that's number 2. Number 3, you'll also notice I have day trades the second time. I counted 33 day trades. 7 days or less I counted. Personally, I would have guessed I had 5. I'm not happy about this. Why do I do this? Look, I'll talk about that off air with you. But number 1, I don't think you have too many positions on. I'm going to pull this up to go through this to show people some things. I don't think you have too many positions on. I think the second quarter, this is a good problem to have, okay? There's been so many ideas that have come to light in the second quarter that it's hard to ignore them, okay? And you want to be in that position as an investor versus being in a position like 2017, 2018, when the idea flow, at least for me, was not good. There's too many good ideas. And I said this last week in the show, everybody complaining about end of the world and recession and everything sucking. They're just not paying attention. This is the best time in the world to be investing in the markets. Yeah, the national debt sucks. There might be war. There's so many good companies moving right now. And so much money is going to be made and is being made that I understand the idea of too many ideas. Okay. My insight to you is that into Q3, and we'll do a portfolio review with everybody in Delta One, is to focus more on a few ideas and cut some down. Okay. I'm not saying this is bad, but again, I saw this quarter as well. I had a lot of positions in our books and we cut some down. Okay. So the 2 thing I want to go through on this is for those of you guys that manage your own money. Okay. What he's done here on this is methodical. Okay. I'll tell you this, and there's a difference. And he said something email. I'm not going to say he's up on the year, but he's not up to where he wants to be. And he's done this for a while. So when you do this for a while, you can be honest with yourself. And I told our investors last quarter, I go, look, we should have made a lot more money and we didn't. And this quarter will be different. Next quarter will be a lot different. But you can be honest. And even though you make money, you're like, look, I know I could have made more, But he's done such a good job with tracking this. And this just goes to show you somebody that does this and is here to put up $500,000 a year or $250,000, and somebody that's here to dick around, trade weekly options, and hope they get it right. Okay. And the reality is this: that's a majority of retail investing. They guess, they make money. Look, I have friends with that. I have a friend this week. Again, he's a good friend of mine. I told him this before. He made close to $100,000 this week, but I've seen him lose it the next week. Okay, because it's just kind of like, again, he doesn't need the money, so it's just kind of like this thing that's like whatever. Okay, but this is something that every investor should be doing. I'll tell you guys this: I look at our portfolios every week, and coming into every week, like GXO, I look at every position and I go, look, do we have enough of, equity in this? Do I need to reduce longs? I'm always paying attention, because as we get to levels, we're reducing risk or adding risk. And that's important. So the key takeaway is this is something to do if I was doing this on my own. Okay. But to answer your question and go back to it, look, we'll talk more in private on this, but I think there were a lot of good ideas this quarter. And I'm being honest with you that, like I said, I think there's too many ideas. It was hard to narrow in on the good ones because there were so many good ones. So I wouldn't beat your head on that. And what else did you say? Even though the account's doing okay, I'm not very happy, but my confidence is still not very high. I know the market can humble a person fast. What takes you to do a technical and fundamental analysis? It takes me literally 10 times longer. I would love a video on how to analyze a balance sheet by you. All of us would. Okay. So look, the answer is this, is that the longer you do this, the faster you just start to see things. Okay. And it doesn't come instant. I know you've been doing this for a while. But it's like anything. Okay. It's like you play golf and you're going to come out to play golf in November. If you play a golf course 10 times, you know the green. Okay. You know the green. You're like, it slopes here. You just know every single hole, the fairway. It just makes sense to you. Okay. And that's not something that comes instantly. It just takes time. So when I look at like Oscar, a few weeks ago, I looked at one thing. I'm like, I don't want to mess with this. Okay. It just instantly, my research is done. And I know right away. Okay. There's little things. I'll give you an insight and I'll end the show here on this. There's little things that I'm always looking for when I look at companies. Number one, if it's a turnaround, what's the turnaround plan? Number two, if there's new CEO or new management, where is that CEO coming from? Do they have a track record of this? Okay. So I would hope, even in your guys' personal lives, when you guys go to find your financial advisors or your money managers, whatever you do, you go, what has that person done? Have they done this? And you figure out, and you look at that. The same thing with companies. So that's number two. Number three, I'm always paying attention to the industry. I don't care about biotech companies or health companies. Okay, not because of any personal reasons. It's because it's too hard to invest in those companies. Okay, when I was very young, I invested in a company called Denadron. Valiant Pharmaceuticals bought them. It was based on approvals from the FDA. Okay, I don't know what the FDA is going to say. It's just like this week in the broad market. I don't know if these guys are going to start firing off more missiles, or these assholes are going to sit here. I don't know what's going to happen. Okay, and it's too hard to make investments on that. But there's things you can look for in companies like buybacks or new CEOs, or turnaround plans that make sense. And there's industries that make sense from a cyclical perspective. Obviously, going into Q3. Interest rate cuts. There's a lot of names we'll talk about that you're going to see in the report that we talked about Delta One that'll make sense. Okay. And you just know based on that these things are going to do that. Okay. And I know that doesn't answer the question entirely. But there's little things you look for that grab your attention and you know where to start to look. Okay. And that narrows down the investment process quickly. But the last thing I'm going to mention, I promise, is the report. Those names in the report are attention grabbing for one reason. Okay, we found them. There's probably 50 more names I could find that I'm interested in, but for sake of research time, we don't put them in. So, yeah, that's it. Okay, so that's my short spiel on that. I'll talk to you in private about the rest of it and go through it. But again, look, I'm not super excited. about my performance this year. We're making money, but look, if I'm being honest, we should be up a lot more. But we have 2 quarters left. Okay, this is halftime coming up. Another 10 days, the back half of the year starts, and we have plenty of time to make it up. And all of us will make it up. You'll make it up as well. Okay, so that's that. That's this week's article of the week. And if you guys have questions, you guys can send them in. You guys can always send me emails. I'm happy to answer them. When you guys send me emails like he did, if you're a subscriber, literally I'll talk with them one-on-one. I have no issue if I have time, and I have time, I'll talk with you guys about things. And I'll talk with him about his portfolio, and we'll go through things as well. Okay, so that's it for this week's report. Issue 25 of the LongVol is out on Sunday. If you don't have access to the LongVol report and you want access, look, I know it's a lot. Just go to about/samples, download it there. If you want to access the membership, click on pricing. Any information, if you're a high net worth individual, accredited, you can click on the asset management tab. There's information for you there as well. All the memberships are on the website. Again, I would not be using Delta One if you don't have a larger port. It's not for beginners. You're just going to be lost, and you're not going to be happy with it. Okay, so you need to have some money. You need to have been around the block. The LongVol report's a good place to start. If you don't want to do the work and you want to swing trade or not pay attention, the swing portfolio is there for you. Again, I'm not going to do the ShamWow pitch to you guys. You guys can read this and go through it. All the information is there. And if that's still not enough, there's a Q&A section, etc., etc., etc. Okay, so that's it for this week. I'm going to try to get a quick dinner in, and then tomorrow morning up at 5 a.m. to ride before it gets to 115, because I think that's what we're getting tomorrow. Okay, so that's it for this week's issue 73 for the week ending June 20th, 2025 for the LongVol podcast and show. I appreciate you guys tuning in. I'll see you guys Sunday for issue 25 of the LongVol.
Thanks for listening to this episode of The LongVol Report with your host, Dan Bustamante. Make sure to like and subscribe on your favorite podcast platform so that you never